Everyone, appreciate you tuning into this episode of The Wolf's Den. Today I want to go over some things regarding collecting payment for deposits, jobs that have been completed, and why cash flow is so important, how that directly relates to collecting payment in your business. Definitely seen some things, some good things, some bad things that worked for us over the past couple of years. So just want to share that with you. And also, if you guys have anything to say, feel free to chime in as well. We can always learn from each other. So one thing that we put in place that we use that really helps out with collecting payments, whether it be a deposit or a progress payment or a final payment for a project, is having a CRM, customer relationship management software, that does credit card processing. We currently, right now, that we use Jobber. We're probably going to be switching over. We're actually in the beginning stages of switching over from Jobber to Service Autopilot. So both of those platforms can take credit card payments, but having something in place that allows your clients to pay online, it's very fast, it's very efficient, and it helps directly with cash flow. So I know a lot of people, and originally when I was getting into a CRM that had the credit card processing, I really didn't want to use it because you get charged a fee. And then I was thinking to myself, why I'm not getting paid the full amount. But in return, you're more or less paying for the convenience of having that not instant, because it does take a day or so to process, but having the quicker return on the cash flow than waiting to get a check or chasing money, and having a quick, easy, and efficient payment method for your clients. It saves you the time for driving from house to house or driving to a PO box. And also in that time that's spent doing those certain tasks, if it was not a credit card payment, you could spend that time doing other quotes, doing other assessments to gain you more money. So it's really a convenience thing. And regarding the fee, we personally account for it in our man-hour rate. So when we are developing our budget for the year, we estimate, historically, going back on some records, we look back on how many of our clients have paid and with what dollar amount and what our fees are. And then we just incorporate that into our budget, which then in return is in our man-hour rate that we're estimating and billing for. So it is being recovered. So just making sure that you're mindful of that. I know some other companies, if you don't want to put it in your budget directly, if you just want to add it as a separate line item potentially, if you want to just cover yourself for that processing fee. Or another thing that I've heard some people do is split it with your customer. So just say it's $100 credit card processing fee. You pay $50, the client pays $50. So those are just some ways that we do it, but it's really personal preference. So another thing regarding payments is something that I've learned the hard way in the beginning. So when I was sending out quotes, I was not collecting deposits on these, the quotes that were being approved, just a signature. I know signatures are very important, but not having something that's financially backing it as well, it's especially depending on the size job. If it's a multi-day job or it has a lot of materials involved in it, the cash flow is not going to be there to support those instant transactions or that labor off the bat. So we always, obviously there's different ranges depending on the dollar value of the job, but most of the time we collect a 50% deposit, and that covers, it shows that the client is committed to us, so they are financially invested into the project and the quote, which is another level of commitment, as well as two, it helps cover the cash flow for the materials and for the labor that's needed for that portion of the job. And on larger projects, if it can get into the six, or once it gets into the six figures, or pretty much 50 grand plus, then we start to change up that percentage of the 50 to a lower percentage, and to account for what materials need to be purchased in prior to the work commencing, and what other logistics need to be set up prior to even stepping foot on the job site. So those are some things that we really, really make sure that they are being taken care of, because you don't want to step foot on the job site without a deposit. Obviously, there's some services like snow plowing. You can't get a deposit for fall cleanups. We don't do a fall or a deposit for lawn mowing. We don't get a deposit for, but some other things, the larger installation work, we definitely want to make sure that we are getting a deposit prior to stepping foot on the job. Another thing regarding the larger projects that I was sort of touching base on is getting progress payments. So if you have a $100,000, $200,000 job, even a $75,000 job, it is very important to obtain progress payments. And usually we like to keep about 10% towards the end of the job when we're wrapping up. So we begin with that initial deposit of, say, 25%. And then after the first week of work, we request another 25%. After the second week of work, we request 25%, and so on and so forth. Obviously, these percentages could change, but just getting to the premise of it, just making sure that throughout a multi-day, multi-week, even multi-month project that we've been on, making sure that there's consistent payments, and not just doing a deposit before you step on the job site for purchasing materials and then walking off the job site once the job is done, because there could be a lot of cash flow issues in there, and just making sure that it is in your contract, it is under the terms and conditions, or the payment terms. It is very important. Cash flow, as well as you don't want to get to the end of a job and have the client be owing you 60%, 50%, 40%, 30% of the overall total of the job. We like to keep it around 10%, because those are just, God forbid something were to happen. You don't want to have a client owing you 35, 40, 25% once you're about ready to walk off the job site. We feel a little bit more comfortable and confident walking off the job site with about 10% remaining. So, I mean, every company is different. Everyone has their personal preferences, but that's just what I personally like to do, and that's what we do in the business. So, regarding collecting a deposit or any other form of payment, progress payment or final payment, when we do collect checks, another big important thing to note is, as soon as you receive the check, deposit it immediately. We have mobile deposit, which is very convenient. We use TD Bank, so it saves a trip. Obviously, it depends on how much the check is, because we have certain limits that we could mobile deposit, but for the most time, it saves several hours per month driving to the bank, depositing it, and then coming back. So it is very convenient, but depositing it immediately, you don't want to just have a check that's just laying around, that is waiting to be deposited. Again, going back to that cash flow. Cash flow is huge. Cash is king. And as soon as you can get it in your bank account, the better. So then after a check is deposited mobily, we put a highlighter through it, or put something on there, take a pen and say, deposit it with the date and the person. So making sure that it's clearly stated with that it was deposited, because I actually had an instance where a couple years ago I didn't do that. I didn't say that this check was previously deposited, and the bank actually ended up calling me, and there was no fines, there's no fees associated with it, but they said that if this is something that you continue on a consistent basis, trying to double deposit a check, there can definitely be a fee or a fine involved in there. Every bank is different, but just speaking on something that I've been through personally. So just making sure that documenting that is very important. Keeping track of it and also just holding on to the checks is important for documentation's sake. But at least saying that yes, this was taken care of, this was deposited, and then moving forward, something to reference back to. Another thing that we do is have a payment tracker on every single job. So it's just a piece of paper that shows the amount of that goes on in every job folder and every job file that shows the amount of the payment that was collected, whether it be a deposit or a progress payment, the person that collected it, when it was received, when it was deposited, and just a more or less a payment tracker, for lack of a better word, hence the title of that sheet that we use, to track payments. Because things, especially as you grow, things can get lost, things can get misplaced, things can get confusing. So just keeping track of it on a piece of paper for that specific job is very, very important. Data collection, not to go extremes, but keeping records of finances is very big, because if a client owes you money, obviously you want to know that. Or if they overpay, you want to know that as well. So also after we received payment, we also immediately mark it paid if it already hasn't done so automatically by our CRM. We go into our CRM and mark it as paid, so it accurately reflects our AR, our accounts receivable. So, and also sending a receipt with the payment to our client for their records as well as our records to show that it has been paid, and making sure that our accounts receivable is as most up to date as we can. So another thing that we do is, God forbid someone were to not pay, someone were to be late with their payment. We want to, with our CRM that we use, we have invoice reminders that go out to the client. I mean, you could change these around, but every couple of days, just to, if they haven't paid yet, just reminding them, hey, Mrs. Smith, you have an outstanding balance for invoice number XYZ. Please remit payment as soon as possible. Thank you. Something along those lines, because things can get lost. People may pay their bills once a week or once every other week. And obviously you got to be mindful of that. Everyone handles their finances differently, but at least just putting in front of them again so it doesn't get neglected is very important. And what do you do when clients don't pay? Right now we have a net 15 pay period. And if it were to go outside that net 15 pay period, obviously we don't want to instantly jump to getting legal action. Those are for extreme circumstances, but we want to be able to work with a client. Maybe it's they're going through a hard time, or maybe they're waiting for something to come in for a payment for themselves, or who knows what the circumstance could be. And we want to be as understanding as possible. But at the same time, they did sign the agreement where to pay within 15 days. So we want to give them a call, maybe send them a paper copy of the invoice in the mail, just to show that we are trying to do everything in our power to work with them, as well as remind them. That is very important. So if they don't pay within 30 days, then we take that next step and send an official letter from our lawyer and just saying, hey, you have this agreement and we really need to just receive payment. If you can do so immediately, that would be fantastic. Most of the time it doesn't get to that. I think in Ever since we've been around, that's only had to happen once. So it is very infrequent, but there's always that one-off time that it could happen. So just having a lawyer that understands your agreements and contracts, and two, having someone that you can go to if this were to be the case is important as well. So another thing that clients ask a lot is, do you give, if I were to pay cash, are you going to give a discount? And unfortunately, the answer is no. I mean, times have changed dramatically in the past couple years, past couple months, and it's not so much the same as it used to be. Also, for tax purposes, you don't want to just completely write off, because that would be an issue with the IRS, with your bookkeeper, with your accountant. You just got to be very careful with what you do, and I personally don't like to take cash. Obviously, everyone has their different ways about running their business, but personally speaking, money is money. Whether it be cash, check, or credit card, and what it costs to do the job, it costs to do the job. So, personally speaking, I don't give discounts for cash. I just don't feel comfortable doing so with what could happen. God forbid something were to come up during an audit. So, I just highly recommend playing by the rules, doing what you know is right, and just having a set standard for your business that's repeatable for everyone. So just making sure that you're playing by the rules. That's really what it all comes down to. And if you were to offer a discount for cash, then just say if it's 5%, what are you going to do with that 5% that was currently allocated toward that job for cost of goods sold, for labor, for machines, for deliveries, for whatnot? So you're actually losing out. I know people could say taxes, and you could be saving on the taxes thing, but also what it costs to do the job. What it costs to do the job. So just being mindful of that. Not saying you have to do this by any means, or giving you accounting, legal advice, finance advice, but just something that I personally do, or don't do, excuse me. And last thing that I want to go over is in terms of collecting payments, is with the reoccurring services such as lawn applications, lawn mowing, anything like that. We like to keep a card on file and run the credit card on file on a weekly basis. So after that week the services have been completed for all of our clients, we'd like to run those credit cards if they were to approve having a credit card being saved on file. So then one, it helps with cash flow. Two, you're not going to be chasing money. And three, we are going to be, can't think of the word right now. We aren't going to be continuing service for them for 4 weeks, and then, God forbid, they don't want to pay. We could at least know that after the first week, instead of waiting 4 weeks and wasting 4 weeks of service, 4 weeks of time, and having a larger bill. If the client really doesn't want to pay, or who knows the circumstance, it's something that is a weekly thing, and you just don't want to be doing a free service for 4 weeks versus 1 week. So just want to cut your losses where you can. So that's another big thing as well. Helps with cash flow. Cash flow is huge, especially when in business, cash flow is everything. So just being able to do anything and everything in your power to keep the cash flow coming in is very, very important. So those are just some things that personally wanted to go over regarding payments, regarding invoicing, regarding cash flow as well. So obviously everyone has their own way about handling their finances, handling their accounts receivable. But these are just some things that I personally wanted to share with you guys. But if there's anything that you do differently, anything that you specifically think could be better based on what we do, or something similar that you do as well, obviously, please let us know. But again, appreciate you taking some time to listen to this episode, and I'll see you guys on the next one. Take care.